So I've talked before about how we have a train wreck in the United States on how people, when they get older, are going to be able to get assistance as they might age and aren't able to take care of themselves like they were when they were younger. And in the United States, because we don't have any clear system about how to provide for people who need assistance later in life, what happens is in families, it falls very heavily to family members, and especially women family members, to provide that care to an older aging relative. Well, I had a question recently that came in from somebody who was like, and I keep thinking about that question, what am I to do? I don't have relatives who can provide that care, and I don't know how in the world I would provide for the cost of care if I needed it in a facility or at home or whatever. And this is a dilemma in many cases. There are people who maybe have kids, they don't want to be a burden to them, or they don't have kids and they don't know how in the world they're going to be able to get the care they need. Well, as far as the government's concerned, the only care that's available through the government is from the Medicaid program, not Medicare, Medicaid, which requires that you be impoverished, and then the federal government and the state you live in share the cost, most paid by the feds, for you to be in a facility or a home where you're taken care of. It limits your options of the market of how many homes are available, because a lot of them won't accept Medicaid, but that's generally the option, is you end up totally broke, and then the state federal Medicaid program pays for the care. But there are other things you should consider, particularly if you are a middle income earner. One of the things is that there are still some sellers of long-term care insurance policies. And these small number of sellers will sell you a policy with not guaranteed premiums. This is the problem, is it'll provide a benefit that typically will pay for 3 to 5 years of care later in your life, but the premiums can escalate over time. The insurers selling the insurance now have a much better sense of the risks and the actuarial costs than insurers did in the past. And so I'm not as worried about massive escalations in premiums for people who buy now versus people who bought 20 years ago that are seeing massive escalations in premiums. But again, the premiums are not guaranteed. Another thing that is commonly recommended is if you do own your own home, you can borrow against your home for the care you need in your home, and you do a reverse mortgage to do that. And that is a case where a reverse mortgage that I refer to as a last option becomes a good, potentially first option when you need assistance with living. Another thing that came up recently talking with a friend whose mom was needing to go into a facility and didn't have a lot of money is there are nonprofit, typically religious-based facilities that will admit you when you have funds to be admitted, but when you exhaust your funds, they don't kick you out. And so these nonprofit religious-based facilities that tend to have different levels of care on a campus are probably my favorite strategy for you to consider. And usually they don't care what religion you are. Once they've admitted you to their facility, they're not going to put you out on the street when you can no longer afford to pay. For-profit facilities when you run out of money, generally will put you out. And there have been ugly TV stories about infirm people put out on the curb at for-profit facilities. And gosh, how heartless is that? So if you have limited funds, looking for a place that is a nonprofit that when you are tapped out, they provide care to you moving forward, uncompensated care as it's referred to, or maybe at that point they take the piddly amount that Medicaid pays and they keep you there for as long as you need to be there, potentially the rest of your life. But this is a very, very hard area. Some states are now coming up with their own insurance plans. The one that I talked about years ago is now, I think, in place in Washington State that is potentially a workable model. We'll see how the Washington State thing works in other states. But there's a payroll tax that you pay that goes into a fund to provide long-term care for you if you need it down the road. The ironic thing why Washington State did it is it ends up saving them a fortune on the state contributions they have to make to the combination federal-state Medicaid program by having people who basically are insured through a state vehicle for long-term care. And if it does work out, I think it will be the kind of thing that more and more states would adopt, because we're an aging population